Hi and welcome to another episode of Monday Market Outlook. Let's look into what happened in the local stock exchange as well as in the S&P 500. So last week we came out with positive unemployment rate numbers. It was down 4.2 from 4.5 last October. This translates to one of the lowest unemployment rates in like 20 years, given that the inflation has peaked at 8.1. The forecast for January inflation is around 7.9. So it is highly likely that inflation has peaked and may start going down. No? This translated into a Santa Claus rally for the PSEI. So ending the year at around 6,550 and surging to a high of 6,750 before it retraced last Friday. Of course, coming off a strong rally from the S&P 500 last Friday, the PSEI is on another rally today, no, and it's up around 100 points, no. Are we headed to its next resistance, 6.8 or 6.9, or are we going down? It's more likely that we will hit resistance here. Now the question is, will it hit 6.8 or 6.9? Now, if we're going to treat this as a consolidation channel here, let's draw a channel, parallel channel line here. So we may potentially be looking at the PSEI to hit, right, around 6,870 or 6,9, no? So who knows? But great numbers, great economic numbers last week translated into a rally in the markets, no? Looking back at our stock picks, we have your banks, you have your defensives, you have your conglomerates, you have your consumers, and of course our dark horse, Bloomberry. Now, congratulations to those who were able to buy Bloomberry when I announced it 2 weeks ago that this was my dark horse pick. Congratulations if you were able to pick up Bloomberry, because it is now trading at 9 pesos. Like, it was able to break out of its 7.77 resistance and its 8 pesos resistance, and it's now at 9. So I would suggest top slicing and then just buying back on the retrace, no? Because usually when stock makes a parabolic move like this, the averages here, the moving averages here needs to catch up. This is what is called when you hear the term it's extended or it's overextended. That means that the price has already extended beyond too far away from the averages. So for example here, when the price moved too far away from the averages, it needs time to consolidate and bring the averages back into the price. We might see either this consolidating, right, or this doing a retrace so that the moving averages can eventually catch up to the price, no? Look to buy back at around 8 pesos or 809 or 810, no? So congratulations to those who got Bloomberry. Now, looking at the past 5 days performance of our stock picks, you see you have Bloomberry, of course, with a 20% gain. Most of our picks doing quite well, no? So congratulations if you were able to accumulate as we've advised last December 19 episode. No, congrats if you're able to accumulate. So the PH market has become so exciting that I've created a stock playlist. These are stocks that we can monitor or play around with and see if there's a potential to trade here, no? So first on the list is Apex Mining, no? So AB Capital came out with a company report on Apex Mining. So they presented a good case for Apex Mining in the coming year, no? So they have a target price of 268. It's currently trading at around 209, no? So I've been monitoring this stock for quite a while now, ever since gold broke out. So if we look at gold's chart here, gold was able to break out of its downtrend line back in November. Now, if we look at why this happened, central banks bought almost 400 tons of gold in Q3 in 2022. This is the biggest transaction of gold for a long time, right? So, and the central bank that bought the most gold really is the Chinese central banks, so which goes into our China reopening. Gold is typically a good hedge for a recession. Also, during Q3, the crypto collapse may have also contributed to gold's rally, you know. So it's currently trading at around 1,876, we're looking at the resistance here of around 1,900. And there's a lot of reasons to be bullish on gold. We have the golden cross here, and we have a likely recession in the US. So gold is always a good hedge against that, no? So just be worried that while this is going up, no, the RSIs may be forming a divergence. But ever since gold went up, no, look at APX's chart, no, it has also been going up. Broke through its 174 resistance, and it also broke through its 2 pesos resistance. So look into buying APX at 2 pesos. It's currently holding well at that level. So look to go in at around 2 pesos if you want, no? And again, price target here, as mentioned, is around 260, which corresponds to, if we look at the weekly chart, right, it corresponds to this support here, no? So price target here, 268, it corresponds to this support level here, no? We'll see an interesting play on Apex Mining, no? So Robinson's Retail Holdings announced that it bought additional stakes in BPI, no? And I guess the market really liked this synergy. Both stocks were up Friday and rallying heavily today. It may test its 60.7 support here, no? So if you want to go in, you can go in probably at 55 if it retraces. BPI, we've been recommending BPI. It's part of our stock list. Congratulations, no? We recommended this back in December. So if you're able to go in, congratulations to you. This is a good long-term play, no? Of course, playing into our China reopening, Cebu Pacific, no? Breaking out of its 200 EMA. Now remember, it was also able to break out of its 200 EMA last August, but it may be too early, you know. So is this a fake out? Will it go down like it did before, or is this a start of a rally, you know? So the China reopening theme may have more legs to stand on this time around. So let's see, let's monitor Cebu Pac. Another beneficiary of this is Macro Asia. So we see here it's still a downtrend line, no? But the higher lows here are higher low formation here shows a lot of promise, no? And also given the reopening play, this along with Cebu Pacific are good stocks to watch. Another stock is Figaro Coffee, no? So it has been trying to break out of its 70 cents resistance for quite some time now, since August. Again, the reopening scenario back then may not have enough legs, no? Will it be successful this time around? This long candle here is supported by volume last Friday. So let's see if in the coming days it will be able to break out of 70 cents and look for this to head over to around 77 cents, no? Another reopening stock would be SSI. It has been trying to break out of resistance at 164, though 1, 2, 3 times. It has successfully broken out today, 169. Is this a dead cat bounce, right? So I'd like to see SSI hold support at 164 and then make another move up. So congratulations to those who were able to participate early on in December to take advantage of this rally. So, but be patient, no? Don't again, like I said, don't let FOMO drive your trading or investment decisions. Now the market is rallying, everybody wants to get in. It's already too late. So wait for the markets to retrace or to consolidate and then get back in, no? Moving on to the S&P 500, the S&P 500 made a strong move to the upside, more than 2% gain to end the week on a positive note. Now, this is interesting as it is playing into the scenario that we mentioned, that we may see a gap fill here, a gap fill to 3,990 before it moves to the downside. Now, question is, when it moves to 3,990, is it possible for it to challenge its resistance trend line here and then eventually break through it? Yes, it's possible, right? But I'm leaning more towards it hitting 3,990 and then the short sellers come in and then retest its 3,750 and eventually go down to 3,550. Now, why am I bearish? Now, remember, the rally last Friday was caused by what the market interprets as favorable economic numbers, right? So the average hourly earnings came in at 4.6% from an estimate of 5%. Now, this means that American consumers are not earning as much as they did, no? And there's a slowdown in the wage, no? And of course, a slowdown in wage means a slowdown also in inflation, which also means that consumers' spending power is also down. However, non-farm payrolls came in hotter than expected, 223,000 compared to 200,000 expected. And the employment rate, remember, the Fed has been targeting a higher unemployment rate. The forecast was 3.7 and it came in at 3.5. So we're still a long ways off from the Fed rate target. Now remember, the Fed is very hawkish and wants more evidence of easing inflation and has reiterated that it is going to continue raising rates until they see inflation at manageable levels. Now, if we look at the dot plot, so remember in the last FOMC meeting, the Fed has reiterated that they're going to raise rates until 5.13 and possibly 5.38% this year, and then slowly reduce rates to 4% next year, and then 3.13 to 2.63 in 2025, and maintain a 2.5 Fed funds rate for the longer run. The main target really is for unemployment rate to hit 4.6%. But take note, they've changed this target several times. They were projecting 3.5, 3.9, 4.4. Now it's 4.6. There's no reason to believe that they're not going to increase those targets again this year. An unemployment rate of 3.5% last week means that the Fed is a long ways off from their targets. So we might see more pressure from the Fed to raise rates and thus affect the markets eventually. If we look at the historical dot plots, last March, these were the targets: June, September, December. See, they keep on going up for 2023, 24, 25. They keep on going up. So the likely scenario would be for the S&P 500 to have a brief rally and then move to the downside again as we go into earnings season. Again, remember that the US inflation rate is still at 7.1%. It is still at its highest for around 40, 50 years. So the Fed still has a long ways to go to fight inflation. So as we have mentioned in previous episode, the US stock market has never really bottomed before a recession, right? So we're not in a recession yet, right? So when we enter into a recession this year, most likely this year or next year, we might see a bottom. It's all not doom and gloom. So some analysts are saying, yes, we might see a bottom next year, but there's still a chance for the market to rally despite this economic pain, right? So is it possible that we could rally to 4,150 by year end? Thus it's a 7% increase, right? Yes, it's possible, because if we look at another chart here, this is the historical performance of the 60-40 portfolio. So the 60-40 portfolio is 60% equities and 40% 10-year bonds. So ever since 1928, during years when the S&P 500, the 10-year bonds, and the 60-40 portfolio is negative, the succeeding year has always been positive. So in 1941, it happened in 1941, 1969, and then most recent 2018. So the succeeding years has always been positive. So we ended 2022 also negative, negative 19, 16, 16. Is 2023 going to be a positive year for us, right? So it's possible. If we are to play out this scenario here, so let's look at this chart that I created. We have the Fed funds rate here. Fed funds rate along with the 10-year Treasury US bonds and the S&P 500. When the Fed funds rate started to go up, of course, the market reacted negatively to it and it started to go down. Of course, the 10-year Treasury bonds goes up along with the Fed funds rate. Now, what we're saying here basically is that, so let's just put the markers here, 2024, this is 2025, and this is 2026, right? So what the Fed is trying to say is that it's going to raise rates to 5.13, maintain it there, slowly go down, maintain, go down, maintain, and then down, right? So for the S&P 500, we're currently rallying back to 3.9, and then we see a further downside. And could this be a bottom before it rallies back up here? Yes, possible, right? This could be a good entry point if you want to enter into the global markets. There's going to be a lot of bargains here. There's going to be a lot of re-ratings. Now, one thing to watch out here would be the earnings calls, right? So, what would company earnings look like during a recession, during a high inflation environment? No, most analysts know it's going to be bad. We just don't know how bad it's going to be. So, if it turns out really bad, we're going to see further downside here. This may not be the bottom. The bottom could be in another year or so. Because remember, the Fed has changed their projections time and again. So if they change it now, this scenario might not play out. Given the scenario for next week, let's try to look into some S&P 500 stocks that you can consider, no? But for now, that's it. I hope you found this episode useful. Please like this video and subscribe to the channel so that we can explore 2023 together. Hopefully, it's going to be a better year for investors compared to 2022. Good luck on your trades. Please manage your risk accordingly. Thank you for watching, and I'll see you next week. Bye-bye.